What's up, guys? In today's video, I'm going to be comparing QYLD versus BST, the NASDAQ 100 ETF, and the BlackRock Science and Technology closed-ended fund. But first, as you can see, my portfolio is at $50,618. And for the past week, I had a market gain of $673.08, and I earned $60.46 in dividends. And if we scroll down in my portfolio, you can see the gains on the week. Individual stocks at the top with 2.18%, then SCHD at 0.88%, then income at 0.69%, then real estate up 0.39%. And you can see that SCHD is slowly growing in the actual percentage. It's at 14.1, which a couple weeks ago was about 13.6, 13.7. Now, if we go into my activity feed, in the last week, not much happened. On April 3rd, I received $5.24 from ADP. I deposited my regular $125. Then I had one buy, $185.72 of SCHD, which is 2.53 shares. And then I received a $28.01 dividend from JEPI on April 6th. So now if we go into QYLD, once again, it's the Global X NASDAQ 100 covered call ETF. They pay monthly, and it's currently trading at $17.21. In 1 year, it's down 17.81%. However, year to date, it's actually up 8.51%. And it looks to be hovering just below the mid-range on their 52-week range. And then they have a 0.6% expense ratio. And then I'm going to go over to the dividends. Scroll down. You can see they have a high dividend yield of 12.08%, the $2.08 annual payout. Then their 5-year growth rate is actually negative at 0.86%, which obviously puts their dividend growth at 0. So that is not good to start off. So this is the QYLD fact sheet. So why would you invest in QYLD? It says high income potential. QYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. For the monthly distributions, QYLD has made monthly distributions 9 years running. However, one of my complaints about QYLD is sometimes they'll give you 2 dividends in the same month, and then the next month it's 0, and then the month after it, it's 1 dividend. And it all equals up to 12 dividends for the year. However, I would prefer to have gotten those dividends one every single month. And I'm sure others would agree too. And then this says efficient options execution. QYLD writes call options on the NASDAQ 100 index, saving investors the time and potential expense of doing so individually. Then you can see it was started at the end of 2013. Once again, 0.6% expense ratio, which is quite high. They have 7 billion assets under management. And then if we scroll down here, they have 102 holdings. And then if we scroll down to their top holdings, you can see they have Microsoft at the top, followed by Apple, Amazon, Nvidia, Alphabet A, Alphabet C, Meta, Tesla, Broadcom, and Pepsi. So these are all great stocks, great companies. And so now let's move on to BST. So this is the BlackRock Science and Technology Trust, currently trading at $32.04. In the past year, it's down 23.8%. However, year to date, it is up 12.34%. And once again, it's hovering below the middle of the 52-week range. And this says they have an expense ratio of 0.88%. Really, BST's expense ratio is around 1 to 1.05%. So that it is higher than QYLD. And then we have a dividend yield of 9.36%, which is also pretty high. an annual payout of $3. And then they have a 5-year growth rate of 16.97%. And they have increased their dividend in the past, but in 2022, with the uncertainty with the interest rate hikes, BST did not increase their dividend. So this used to be over 25%. So we'll see what happens with the economy and with the market. Hopefully in the future, BST increases their dividend again. But now looking at the fact sheet, so BST is a perpetual closed-ended fund, and they started in October 2014 with the investment objectives of providing income and total return through a combination of current income, current gains, and long-term capital appreciation. Under normal market conditions, the trust will invest at least 80% of its total assets in equity securities issued by U.S. and non-U.S. science and technology companies in any market capitalization range. And they're selected for rapid and sustainable growth potential from the development, advancement, and use of science and or technology, and or potential to generate current income from advantageous dividend yields. And as part of its strategy, the trust intends to employ some covered call writing options. So now if we scroll down, you can see their top holdings are quite similar to QYLD. You have Apple, Microsoft, MasterCard, Visa, and then you have ASML Holdings, Project Debussy, Project Picasso, Cadence Design Systems, Project Shopping Series E, and then Wolfspeed Inc. And these last holdings in the top 10 are majority private equity funds. And now if we scroll down, you can see by sector, they have software and services at 47.5. Then we have tech and hardware equipment at 10.1, media and entertainment at 5.4, consumer services, retailing, and so on. And their geographic breakdown is majority United States, followed by China, Netherlands, France, United Kingdom, Cayman Islands, all the way down to Japan. And as you can see, their management fee 1%, gross expense ratio 1.05%. So now we're going to do a back test between BST and QYLD. So we have it set to $100,000 initial amount. We're going to reinvest the dividends, display the income, and then we have portfolio 1 as QYLD and portfolio 2 as BST. So let's see what happens. And as we can see, BST completely destroyed QYLD in the gains. However, BST also had a large drop-off in the last year, whereas QYLD just sort of stayed it stayed steady, declined a little bit, and came back up, and then declined a little bit more. So we have initial balance of QYLD at 100K, final balance at 169,511, and then BST had an initial balance of 100K with a final balance of 334,500. QYLD's best year was up 22.67%. BST's best year was up 69.09%. And then when it comes to the worst year, QYLD was down negative 19.09%, and BST dropped a whopping 38.29%. So if we scroll down to the portfolio income, that's what I want to see, especially after seeing that QYLD, their dividend income decreased by that negative 0.86%. So as you can see in 2015, QYLD in the blue outperformed BST, and same as 2016 and 2017. However, if you look at that, you can see BST is growing quickly from 7,000 to 7,500 to 8,600. And then in 2018, QYLD once again beats BST. However, in 2019, and another point, 2018 to 2019, QYLD's income dropped and BST's income soared. And before I talk about BST's income soaring. As you can see, it dropped in 2020 and it rose again in 2021. And then their income dropped in 2022. And I've pointed this out in another video. This is not a red flag. So if we go back to Seeking Alpha, you can see that at the end of 2019, BST paid that special dividend, which is why their income shot up. And then in 2020, with the pandemic, they ended up not paying a special dividend at the end of the year. However, they did increase their dividend from 17 cents to 19 cents during 2020. And then as you can see in 2021, they gave another special dividend. And then so this year, 2022 is more indicative of what BST is going to pay out as far as their dividend. Because you can see in 2022, they consistently paid 25 cents throughout the entire year. And as you can see from 21 to 2022, QYLD's dividend income dropped. And I actually held QYLD for over a year. And at one point, my dividend income dropped 30%, I want to say. So looking at this graph, I would say in my opinion, I prefer BST just because they give that consistent monthly dividend. It doesn't fluctuate or go up or down. It's just consistent 25 cents. Hopefully in the future, when the market and the economy gets better, BST will increase their dividend. And as I pointed out before, I don't like that QYLD will pay 2 dividends in 1 month, 0 in the next, and then 1 dividend in the month after. If they just kept it consistent, I might have held on to the stock a little bit longer. But ultimately, I'm glad I got rid of QYLD because it seems that their income just keeps decreasing over time. So guys, thank you for watching this video.